Hi, Tim. Thank you so much for accepting the interview. Today is such a busy day.
Yes, it is, and it's been a very busy week.
Yes, so the first question, the Federal Reserve announced a 25 BPS rate cut. What are your initial thoughts, and what are the market reactions?
Well, that is right what the market expected, and in addition to the 25 basis point cut, they announced that they are going to curtail all of their quantitative tightening activities on December 1st.
Right.
That's a positive, both for the bond market and the stock market, but that's not the reaction that we're getting right now from bonds and stocks. We had a very sharp move down, maybe at about 10 minutes or so into the press conference. And the reason was he was, despite the fact that the market has about a 95% probability of another rate cut in December, he very specifically said that a rate cut at the next meeting is anything but a foregone conclusion. Meaning it's like a jump ball and he would not commit. He wouldn't even say they're leaning there, or it's most likely, or it seems like we're on that path, or any of the other vague innuendos that he usually throws out there. He said it is anything but a foregone conclusion. And as soon as that statement came out, stocks went down sharply, bond yields went up sharply, because that's very contrary to what the market has been expecting on the probability for a rate cut in December.
Okay, so given the decision of a 25 BPS rate cut, what signal do you think Chairman Powell is trying to send out to the market?
Well, I think he's trying to send out that, that where after for well over a year, they were more concerned about inflation than employment. Now they feel that is a quite imbalance, although they had been somewhat restrictive policy. He still says there's in a somewhat restrictive policy, but he's being very non-committal on December. And he is basically saying that we need to lower rates by 25 basis points to the 3.75–4% range to get the concerns about inflation and employment a little bit more into balance.
Balance, right? Yeah. So you think it's a positive signal for both equity and bond market in the short term?
I think that it is, and I think a lot of times you do get this very sharp knee-jerk reaction to things that are said in the press conference, and maybe they're not said exactly the way they're meant to be said, and then the market overreacts to them, and then sometimes the following day you get a completely opposite reaction.
Right.
We won't know about that until tomorrow, of course, but we've got about 55 minutes left in today's trading session. We've rebounded quite a bit off the lows, but we are still quite a bit below where we were when he made those comments about being so non-committal on the December rate cut. The market did not like that.
Okay, so looking ahead, what do you think would be like the key points or data points that Federal Reserve will be watching closely to make their next decisions?
So obviously they're going to be looking at any data they can get from their own private research on employment and on inflation, even though the government is shut down right now and we're not getting your typical boilerplate government data on labor markets and inflation, and they didn't mention this, but I think also, and the Fed rarely discusses like consumer spending, but I think that heading into the holiday shopping season, which is the most important time of the year for all retailers in the country, and consumer spending is 68% of the economy, I think they're going to be very focused on the level of discretionary spending, and do consumers have enough money left over after all of their mandatory expenses to do a healthy amount of discretionary spending on the holiday season. And if they think that might be slower than expectations, I think they're going to be very willing to cut
more risk,
again in December. And they're probably not going to talk about that. They may do some private research into it. They rarely talk about consumer spending, but I can't imagine that is not a key data point that would affect their opinion on where the economy is going.
Yeah, I think that's a very thoughtful takeaway because consumer spending usually they focus more on either labor market or inflation. But this time into the holiday season, definitely consumer spending is a key point for them.
Right,
to
and look, let's just so all of your viewers know, Black Friday, the day after Thanksgiving, got its name Black Friday because historically that was the day of the year when most retailers went profitable on the year. So think about it. With only 5 weeks left in the year, most retailers are in the red until you get to Black Friday, which is a massive shopping day for the holiday season. And that's when retailers do so much business. It's changed a little bit now with shopping on the internet, that they go into the black for the year. That's where Black Friday came from.
Thank you so much.